I'm Arnoud Busmann. I'm the CEO of MineHub Technologies, which is originally a Vancouver-based company, but with operations in Europe and Asia, particularly in customer-facing key countries like Singapore, China, and Japan. We're built an enterprise-grade blockchain platform with a series of applications that enables companies that are to bring much more efficiency, transparency, and resilience to their supply chain operations.
Right. Okay. That's perfect, Arnoud. We caught up in December. We kind of got the full kind of picture of what the business was then, very much in sort of test phase and in terms of customers testing the product. But I think it's probably, and I'll put a link below so people can go back and watch that. I think it was a useful session to understand you and the company. But tell me this: what's the kind of thesis on which this company, your business model, is built? What is the problem you're trying to solve?
At its core, we transform the way companies execute their supply chain transactions, and the benefits of that spill out into multiple places. But I think the most urgent one that we see play out every day in the markets is around inflation, right? Caused by supply chain disruptions, and they take many forms. They have many causes. But to give you an example, recently we had a lockdown in Shanghai because of COVID. And then we saw lots of container liners and bulk carriers sitting outside Shanghai port, not being able to discharge. Now that caused massive shortages around the world because all the carrying capacity was locked up there. And why were they locked up? Not because there was no capacity to unload or discharge the cargo. It's purely because because of the lockdown, couriers were not able to deliver physical paper documents to the banks and to the customers to get paid and release the cargo. That's it.
Wow.
So 17th century technology causing massive disruption in the 21st century.
Okay, so basically all of these mines who are shipping product to China, the boats are sitting offshore, not physically able to get anyone onshore to hand paperwork to a bank. That is very 17th century. Brilliant. So you're saying, right, we are going to digitize that component on a blockchain technology and platform. That's what you do.
That's one part of what we do, and we don't do that just by ourselves, but with partners. But we do a couple of other things. So if you look at supply chain operations, how they work, you got like 20, 30 companies that need to collaborate on a transaction. I'm a seller. I'm selling something to a buyer. I've got inspectors, we've got carriers, agents, etc. They all need to collaborate, and everybody is continuously looking for information. They're collecting information, they are coordinating on information, they are verifying information. And everywhere else in the world, you do that on SAP, some shared database, or even set up a WhatsApp group, maybe with some Dropbox folder where you share documents. It doesn't exist in this world. People there's an enormous amount of friction in collecting, verifying information. And we collapse that by creating the central repository, the central place where parties collaborate. Now that unlocks data, creates a lot of transparency, security, etc. in these supply chains.
But surely there's got to be a lot of optionality out there for people. There's got to be a lot of competition for you, and maybe some groups do understand how to send an email, etc. So why does it need a kind of complex blockchain solution for what seems like a really quite simple problem you're trying to solve?
Yeah, and it's not because people haven't tried. It's around data governance. So let's say I'm a big trader, very competitive in the market. Am I going to run my data on somebody else's platform? Probably not. I want to keep control of it. And what we've seen in platforms being extremely powerful in enabling industry and business transformation, we see that there's no party that really is comfortable trusting their data with a competitor or a third party. If you're running a big part of the global iron ore on your platform, transaction, all the contracts, locations, specifications, stuff like that, you don't want to have a couple of spotty teenagers in the garage running the database, right? They might be tempted to sell it. So you want to keep control of the data asset. Blockchain is fundamental. The other thing, what we learned as well, is the only architecture that enables companies to be both compliant with data residence regulations like you have in China, cybersecurity regulation, and privacy expectations outside of China. So effectively, you need the same piece of information needs to be physically stored in two locations, and that problem is solved by the technology that we're using.
Right. Okay. So if I look at you talk about a situation with Shanghai recently with their kind of COVID lockdown, causing real problems in supply chain globally that we've all been affected by, but we've also had Russia, Ukraine situation happen since we spoke last December. That's put a real spotlight, I think, for people on what global supply chain looks like in a way that they hadn't really been able to visualize before. All of a sudden, the cost of energy has gone up. All of a sudden, wheat and grains are not being transported all over the world, and it's affecting us day to day. So I think people understand the concept of global supply chain more visually than they did before. But what about your potential customers? Does that change things for them, or were they always sort of cognizant and aware that they needed to up their game digitally? Has this accelerated anything for you? Because if I'm looking at your share price, not much of a reaction in the marketplace. So I've got to look to something positive, which is a reaction from your potential customer base. So what's happening?
Yeah, I think what's been happening over the decades is that companies have optimized their supply chains for efficiency, lean, mean, just in time.
Yeah.
And a couple of shocks in the last 2 years have shown that breaks down very, very quickly and leads to massive damage in businesses. So there was some research done at the end of last year. I think when we last spoke, we had an Economist article, an interview. They highlight that single shocks in supply chains on average cost them 42% of the EBITDA for that year. So it's huge. So we see companies accelerating their investments in digitalization, particularly recently, particularly also because of the events in Shanghai. It's stepping up, and the concept of supply chain resilience is what nobody was talking about a couple of years ago, is now leading. People understand that resilience is more important. And how do you build in resilience? It's visibility into supply chains. It's visible, not just your tier one, but tier two. Where's your supplier buying from? Is that country at risk? So having that visibility is important. The other thing, if you, let's say in the context of this war in Europe, ESG is often associated with the E, environmental, reasonably often with social, but hardly ever the G. And the G is now becoming massive. If you think about if sanctions need to be applied, and you've got particular shipments that need to be verified where they come from, etc., you need to evaluate the G dimension in real time. So if you think you find an alternative supplier, you need to very quickly be able to verify the compliance of the supplier and the product they sell you with the policies and from the policies of your banks. Okay,
so I think I understand the kind of the mechanism and why it's more efficient. But again, I could come back to the customer bit. Is they're upping their game, and they could use a kind of conventional supplier purchase agreement and so forth, and that can be electronic, it can be digital. They're not necessarily all sitting on a offshore Shanghai, right? So there's different variations of solutions out there already. What gets them over the hump and say, look, this needs to be a joined up, blockchain-driven exercise, because the benefit to you is what? What's the sales pitch to them, and say, you need to do it because why?
Depends on what side of the transaction you are. But in general, we see resilience as a big one. Suppliers want to get paid, particularly if that relies on physical documents being delivered. So cash flow is a big one. For if you are a processor and your plant running relies on continuous supply of feedstock in the right quality, you want to make sure that you keep that coming, right? Otherwise, if you need to shut down your factory or your plant because of a lack of feedstock, it's hugely expensive also to restart again. To have that visibility, where there's a disruption, being able to replace it quickly is important. Customer experience. There's an interesting one. And I use this example regularly, if you buy a pair of socks from AliExpress, at the moment, $2. You can track that shipment from the moment it gets put on the courier, and you get SMS messages, the name of the guy that's going to deliver to you the next day, etc. You can follow it. If you are buying a $30 million shipment of copper concentrate. You don't necessarily know where it is. You need to go and find that information. You need to track it. You don't necessarily know what's in it. You just know what you've bought. You still need to verify that what you bought is actually correct and that it's compliant, etc. So that is the game changer that we look for. Is can we help companies, suppliers of these goods, compete on a digital level, operate like Amazon, for instance? Compliance, ESG, what I mentioned. Companies need to account for particularly their scope 3 emissions, which is essentially the way they do it now. Everybody has their own spreadsheet and they send each other spreadsheets and then they copy paste it into their spreadsheets. And before you know, you got this complete mess trying to calculate what you've done. Whereas it would be so simple if you just have a shared spreadsheet at a value chain level where everybody just fills in their little cell and then everybody can calculate their scope 3. Now that doesn't exist, and that's what we're building as well.
Okay, so you're kind of Amazon, but we're talking, because obviously the BHP announcement kind of skews my thinking towards natural resource more broadly, but it's agriculture and any kind of movement of goods, right? Is that right? Okay.
Yeah, absolutely. It's supply chains that we're focusing on. We built one application that is quite specific to concentrates. It's our assay exchange, hugely popular. In terms of it really solves problems in that particular mining and metal segment. But for the rest, we're solving supply chain problems. So whether you're shipping trucks or spare parts or concentrates or cathodes, a lot of the problems are similar.
Okay, so I want to kind of get to the heart of it, because it's the benefits-led sales pitch is where you could win or lose, right? So the kind of ensure you get paid quicker, the kind of cash component, that's very, very important for everyone, especially in markets like this. That kind of movement of cash and the speed at which you're paid is important. The kind of feedstock component, I need to understand that. Are you saying that the platform effectively becomes a market for, because you want to ensure your feedstock is coming through swiftly, so you don't have to shut down your plant or whatever facilities you can't get the feedstock. But that's down to sourcing. So is there a kind of internal market component to the product as well?
No, not this stage. We're very post-trade focused. We'll work with marketplaces, but our place is post-trade because there's a common good for the industry where everybody's aligned in their interests. In the marketplace, you don't have that alignment, right? So we don't want to mess with the commercial aspects of companies' decision making. But if you are, let's say you're a big steel mill, you need to keep running. You maintain stockpiles, and they have a critical level where that you need to have to be operating for a couple of weeks at minimum before you need to have that replaced. So if you don't know usually what's coming your way and where it is, you just know where you've ordered, not where it is. You need to, and you have no real visibility on disruptions and the impact of what you just ordered. You need to maintain very big levels of stockpile just to absorb supply chain disruptions. That consumes a lot of working capital. So if you can start optimizing that by having better grip on what's where, that saves a lot.
Right, and that's shifting. I think in current markets, shifting away from the just-in-time policy to maybe giving yourself a little bit more buffer by being able to track. Okay, understood. And then the kind of compliance stuff, because I know we talked last time about carbon footprint and measuring those sorts of things. Is that really important at the moment? We're still seeing SEC and reverse exchanges come down on some of these funds which have just kind of overstated their ESG profile. Do people really care about that, especially in the supply chain?
More and more, we see, and a lot of it is actually not that consumer driven. It's driven by institutional investors, financiers. It's directly related to cost of capital. So if you cannot, let's say at the moment the carbon price is reasonably arbitrary. There's a market, but it's not a very effective market yet. I think if it was the voluntary market became more mandatory, you would see probably the cost of carbon going up significantly over time. Now, if you ship goods and your cost of shipping now suddenly needs to include the externalities like the carbon cost, and you need to pay for that, you better want to make sure that you're not paying more than you want to. So that's one thing. But if you as a mining company, first you rely on capital, whether it's let's say it's institutional capital. If you're a listed company, if you want to keep access to that, you need to demonstrate an improvement in your performance and demonstrate that you're on your way to your non-zero commitments that you've just made a couple of weeks ago or a couple of years ago. And you need to be able to show that you demonstrate from a baseline that you are continuously improving, optimizing your portfolio. If you can't do that, then that capital suddenly becomes a lot more expensive or not available. Right, so it's hugely valuable to solve that problem.
Okay, so I understand the kind of the moving parts and variables in terms of the product line and the sales pitch. So let's take an example here. BHP announcement you've made, right? They had been testing with you last time we spoke back in December. This is now a commercial agreement. Is this just wrapped up in a pretty bow? Does it actually mean anything? What's a commercial agreement for BHP?
I think I'm referring here to the press release, and I think it describes it quite nicely. We have been publicly visible working with BHP and some of their customers on trades. I'm talking Baowu 2020, Min Metals 2021, Zijin earlier this year. So a lot of that was piloting, and we learned a lot, and we improve our operations, we improve the platform, make it more suitable towards its mission. And that relationship has matured to such an extent that we can now transition more to a commercial use of that platform in operations, right? And not just, it's not a BHP platform. It's very much an industry platform. We've worked with many companies to develop it and refine it and test it, etc. And we're very pleased to have had the privilege to work with BHP as well, and that they are, as an industry leader, setting an example and moving towards a commercial agreement.
Right. Okay. But again, with my kind of cold hard commercial hat on here, I need to know where that relationship goes to, in terms of increasing reliance or a kind of bigger statement of intent or commitment from them. Or how do you use their name to kind of get this, the next group of people through and say, look, it was good enough for them, it's got to be good enough for you, and how quickly those commercial arrangements come through. So how are you coming at that whole... Look, you spend a lot of money. You spent like plus $8 million building this thing, right? And since when we last spoke, I don't know if how much more you spent since then, but you've got to start doing a return on this investment. And you've got to start showing the scalability of this product that you've got. So what's happening?
Yeah, absolutely. So I think this is a team sport, and I don't think we're going to get the 8 million back from one particular company in 1 year, right? So it's really we're talking about industry transformation, where the prize is massive. It's absolutely big, right? So and there's no question around it. Everybody wants to move. Everybody understands that digitalization is going to happen just because the price is so big. And we've seen the impact of not having it in the last couple of years. They don't want to have a repeat of that. So it's going to happen. Platforms are the way to do it, because it's such the way the problems that we need to solve can only be solved by platforms at an industry level. They're not going to be thousands of platforms. There's going to be one or two, because the value comes from network effects and critical mass. Not everybody can have critical mass and network effects, right? But there's probably not going to be multiple, because we still need optionality. If one road is closed, you need to have another road to go through. Now, but it is in the post-trade space where we are, it has to be blockchain. There's no alternative. And what I hear back from customers and partners that we work with, that we're by far the most advanced, mature, and backed platform. So it's very likely, if not inevitable, that we're going to be one of those companies that drive industry transformation. Now, once you do that and you got critical mass, that's where the real value starts coming. But we need to get there, and the only way to get there is through working with leading industry players like BHP, but also other parties that we work with. We announced our partnership with Sumitomo Corporation last year. Some of the companies in China that we work with are massive industry giants, right? So it's a team game.
No, I get it. This is the thing with trying to do like institutional or enterprise level software solutions, blockchain or not. That it's quite a hard sell because there's a bunch of barriers to entry. There's existing systems with, there's companies that have spent a lot of money on a system. It may or may not work. It may or may not be as efficient as yours, but people are kind of committed to it. And the thought of the thought of change is quite painful, right? So, so you have to be super, super confident about your sales pitch in terms of the benefits of the company and put a dollar number on it. As in, you use our system, you could save X dollars. So that's an easy decision for an investment committee at an enterprise level. And you're talking about port authorities, you're talking about administrative departments within, transportation companies and its broadest context. You're talking about departments within, natural resource companies of all sorts of shapes and sizes. So the sales process for you, the efficiencies come from how quickly can I get people over the line, and what's the kind of the cost in terms of time and money to get them using these things efficiently? Because I think last time we spoke, you weren't quite sure how you're going to charge. So presumably you've got a better idea now. So all of those things, I think that's the sharp end of the stick, as it were. So where have you got to?
No, it's fun, and we're learning on that side as well. We're getting some pretty interesting pricing feedback as we go through those discussions. But taking one step back, so a couple of starting points. We're not an enterprise sales force, right? I haven't got an army of software sales guys that knock on every door and try and sell software to a company, because most companies that work, they've already got great software. They've invested, if not hundreds of millions, if not billions of dollars in that. So we're not going to replace it. That's not our role. We step in between companies. So the friction in adopting us is not that big. They don't have to make an either or decision. Are we going to have SAP or are we going to have MineHub? No, you have both, of course. So there's no competition there. But what we are doing is new. Everybody gets it. Everybody understands if you do something digital, it's going to be better, faster, and cheaper than paper. It's very hard to argue that logic. And digitalization is a must-have solution for some of the problems that we see. But it's also, you need to, because it's an industry platform, there's a lot of fast followers. I think almost everybody is a fast follower.
What's that mean? What do you mean by that?
A fast follower is saying, look, I understand where you're going. I understand this is going to be the solution. I understand that if you win, or if you are becoming a successful platform, we'll definitely be there. But we want to make sure, before we commit to it, we want to make sure that you are going to be that party, right? That we don't take a risk that if we go, suddenly the industry leaders go another way. So this group, and many companies I've talked to are fast followers, and I fully understand it. Working with a couple of companies like we do that are industry leaders that are showing the way, I think we'll create that tipping point. Right? That's my thesis. We'll see how that plays out. I mean, there are still a lot of, we still need to compete for attention in roadmaps, etc. But the pandemic, the wars, etc., really elevated digitalization from something, we'll do that at some point, to must have. So we're not scared. Our awareness of our name is growing quickly. We are working closely with our partners to roll out to engage their business network. So it's happening.
Okay, but talk to me about the money side of things, because you got to have a better sense of, you said you'd had some useful feedback on charging, etc. Because it's either, because you want as few barriers to entry as possible. So you don't necessarily want to put a big costless thing up front. You want people on their desktops and able to use it as quickly as possible. So have you thought about a per seat basis, a transaction basis? I mean, how do you make money?
Yeah, there's a couple of components to the pricing model. So we have what we call setup fee, just to spend some time getting it set up, etc. We have a basic subscription fee that gives access to the platform. That you don't get much for that, but you get access to it, and it pays for the infrastructure and some of the services that come with it. And then we have a series of applications where we charge on a value basis or usage of value basis. So if you have what we call our trade management app, let's say we give 12 shipments for free, and then we start charging on a per shipment basis, a certain amount. And then you can calculate the number of shipments, whether a container base is a lot more than bulk, but there's quite a few out there, right? So we have, particularly if you work with large companies. On our trade finance side, we actually help the financier to reduce their risk, so we charge them. We charge a couple of basis points of the value of the assets that are being financed. ESG, I still need to, this is the bit where we're doing quite a bit of discovery work at the moment, but I know that if you, if we can enable that automated scope 3 accounting pre-audited, and companies can use that to either maintain, if not reduce their cost of capital, I think the price is pretty big, right? So we'll figure out how we can charge more on a value basis there.
Interesting. How does someone regulate, monitor what's being filled in on the blockchain form or spreadsheet? You know, if someone goes, scope 3, yeah, tick, who says that tick is correct?
Because we don't just provide the data, we also provide the details of the person that sets the tick. And if the tick is a well-known auditor, then that gives that seal of approval that everybody can verify, right? It's less actually about the content of the data. It's more about who says the data is correct. So if you can only provide the data, it's pretty pointless. You need to provide the sign-off as well.
Okay. Interesting. Well, it's interesting times. I mean, it's interesting times because the markets are doing their thing at the moment. But I saw the BHP press release. I thought that was interesting, and a slew of other kind of press releases around groups agreeing to the need for digital, etc. But what I want to see from you the next coming few months is like how many of these fast followers come through, how many more of these conversations convert into deals and transactions and revenue following that as well. So what's your take on the next 6 months, 12 months for your company?
Yeah, I think we keep going as we are. We just went from 0 to 1.
Meaning, so clients you're talking about, from 0 clients to 1 client.
Yeah,
okay.
Exactly.
Yeah, okay.
It's Peter Thiel's famous book, and it is hard, right? It's a watershed moment because you become a different company from that point onwards. But I guess I'd like to think that we're already working with 2 through to 10 as well. And that's a matter of time, and I expect things to start accelerating beyond that. I'm a very optimistic person also in these markets, so but I can see that movement's getting there. From a revenue perspective or the price, there's another way of looking at it. So we have our core platform without all the cool apps and stuff like that. It takes out enormous amount of friction from supply chains that is currently there because it's document-based and manual processing and reconciliation, stuff like that. The UN has put a price tag on that friction, and it's about 5 to 10% of the value of the goods that are being traded. Now, it doesn't apply in every case, but if you add up working capital cost and all those things and wastage, maybe that amount is correct. Now, if you look at the copper market, let's say it's a $250 billion industry, if not bigger, and we can take out a cost of $20 billion per annum out of the industry, or digitalization does, and we can capture 1% of that. We're still talking about 200 million to revenue per annum just out of copper. And this is a small market, right? We're looking at iron ore, which is much bigger. We're looking at container-based shipments, which is huge market. The supply chain market is $20 trillion, right? That's the value of the market. So that's where the price is going to come from.
Interesting times. I say the size of the prize is quite fascinating. Arnoud, appreciate your time today, and thanks for coming back in and seeing us, letting us know how you're getting on. Stay in touch.
Yeah, will do. Thanks, Matt. Bye bye.